I'm ReShawna Leaven with KW United, and this is the financing series. Today's topic is on loan types. Let's get started. So, there are several different loan types when you go to purchase a home. There is conventional, there is FHA, Federal Housing Administration, there is VA, Veterans Affairs, and there is USDA, that is rural housing. So typically, what is common that people think that you have to have 20% down with conventional loan. That's standard to not have what's called private mortgage insurance. So though there are other programs for first-time home buyers with only needing 3% down. If you have purchased a home before, they have programs as low as 5% to avoid private mortgage insurance. So with FHA, it's 3.5% down with private mortgage insurance. VA is no money down, and USDA is no money down as well, though you have to purchase, the home has to be in an eligible area, which is designated as rural. So let's talk about when you're submitting an offer, what that looks like from an listing agent. That's the agent that represents the seller, and the seller, how they are presenting your offer to someone. So you have there are 3 offers here on the table. So you're purchasing the welcome home, lovely door here, well, intending to purchase in this example. So the purchase price is $400,000 on all offers. The first offer is the buyer is putting down 10%. The second offer is 3.5%. The third offer is no down payment. The first offer, there's no home inspection. The second offer, there's no home inspection. The third offer, no home inspection. The first offer, no appraisal contingency. The second offer, an appraisal contingency. The third offer, an appraisal contingency. The first offer, no seller concession. The second offer, no seller concession. The third offer, no seller concession. And what a seller concession is when the seller pays the buyer closing costs. The first offer is going to close in 21 days once the contract is accepted. The second offer will be closing in 25 days. And the third offer will be closing in 30 days. So now let's analyze the first one. So the first one, if I'm advising the seller, I would say, this is my top offer because there is no home inspection. The buyers are willing to pay the difference of the appraisal, and they're not asking for closing costs, and they can close the fastest. So the second offer, they have a down payment. What I'm going to dig deep a little bit more is to see if this buyer is getting their down payment from a down payment assistance program, because I want to know how long that process is going to take. Is it really going to take 25 days, or do they really need 50 days? And also there is another walk away. Well, there's several with this one, because the buyer wants the home is contingent upon the home inspection. So if we can't negotiate on home inspection items, then this buyer is going to walk away. But if they didn't walk away with the home inspection, they will possibly walk away if this home does not appraise with the appraisal contingency, if we can't come to a meeting of the minds on the $400,000. So third offer. So there are no down payment. That's not a problem because VA, you don't have to put any money down. There's no home inspection, and the contract is contingent upon the appraisal. So basically, if the home does not appraise, they will ask for a possible sales price reduction if the house is not appraised at $400,000. So I would say between the 3, I would select the 2 offers here between the 2. Because what you have to understand in today's market, more than likely, you have to submit your highest and best offer. So it's not likely that the seller will counter you. So if you're willing to do a little bit more, I would say go ahead and do that rather than say, oh, well, let's just see what the seller is going to do. No, don't do that because you'll lose more than likely. And just because you do everything you possibly can do doesn't mean that you'll win. But put your best offer based on what you want to do. So say, for instance, you were the FHA buyer, but you were willing to pay a difference of 10,000 because you had that. I would say make your offer 10 for 10. If you're willing to pay, if you're confident enough that the house would appraise, say that you're willing to pay 410, and say the house has to appraise at a minimum of 400,000 to make it work, and maybe not do a home inspection. So it's a lot of different things. But that is basically what the offers are. And on average in today's market in the DC metro area, not every home, but on average, most homes see from 5 to 10 offers at one time. I've represented a buyer where we had 40 offers recently. So that's just how the market is. Different price points will have variations of various offers, but just keep in mind that more than likely you'll be in competition. Whether we were in the crazy frenzy of the market in the summertime, there always have been bidding wars. It's just we don't have the inventory right now. So what I've seen in today's market, let's talk about that. So there are escalation clauses. So an escalation clause is you saying in this particular example, say the house was listed at 380 and you're willing to pay up to 410. So if there's another offer that comes in at 405, then you're willing to beat that offer out of the sales price. And it's more that goes into detail, but that's the sum of what that is. A higher earnest money deposit. So earnest money deposit is your good faith to the seller that you intend to do everything in your power to close on this home, and you've done everything. You've submitted all your documents, you're pre-approved, everything's good to go. So typically I would always recommend 1% of the sales price, but in today's market I would say put all the money that you are going to need to close, because then the seller will know that you actually have your closing costs, you have your down payment, you have all those things, and you're willing to close on the home. So next, no home inspection contingency. So you want to make sure you're looking at those, high ticket items. I've seen what they call a pre-offer walkthrough with a home inspection company. That can get costly, but you don't want to submit an offer on a home and then there's just a lot of things that you're going to have to deal with later. So no financing contingency. So that means that you can't, if the lender denies you in the end of the contract, when you get closer to the end of the closing date, that you cannot walk away based on your financing. So if they send you a denial and you didn't have a contingency, you cannot walk away for that reason. You would lose your earnest money. So no appraisal contingency. I've seen this too. So what this means is if the home does not appraise, so in that $400,000 example, if the house only appraised at 390, you're already saying that you're willing to pay the difference of 10,000 and that you have the money, of course. That's important. So you need to talk to your agent about that, about what that really looks like for you. I mean, it's no contingency, but I mean, you can ask the seller, but in this market, it's not likely that they will lower the price. It's possible, but not likely. And no seller closing costs. I haven't seen this for a while. And then closing as quick as possible. I've seen as little as 15 days. I mean, I've seen as quick as 12 days, but you just give some time for the transaction to go through. So that's all about this video. I wanted to talk briefly about what's going on in this market and to understand, what it looks like to look at a multiple offer situation. It's first, you look at the agents look at sales price, then they're going to look at, they're also going to look at your lender. What lender do you have? Have they had experience with the lender? Does the lender, did the lender call them to tell them that, okay, well, my client submitted an offer, they're solid, they have good, assets, and they're ready to go. Did they not communicate at all? Because what you don't want is, even though there are no contingencies, nobody wants the deal to fall apart in the end. So if you have any questions, if you are not represented by another agent, feel free to give me a call and contact me at your earliest convenience. Thank you so much for watching.